You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Rise and shine, Perth. My name's Trent Fleskins, your host of the Perth Property Show, where every week we get Perth's biggest experts into the studio to chat on their favourite property topic. Today we're going to talk about educating yourself in the property market, in investing in property. This is a question I get very often from people on the street, from clients, from friends. What books should I be reading to understand property investment strategies or just investment in general? Are there any seminars I should be watching, or are there any people I should be following? And it's a really hard one to answer because it can be hard to find good quality information that doesn't come with a sales pitch at the end of the day.
Yeah.
It's something that it really isn't laced with conflicts. And to help us with that conversation is someone that I really respect in this industry, in the West Australian real estate industry. That's Jon Marlow. Jonathan, thanks for coming in again.
Thanks for having me.
Let's start off with some books. Just on a broad basis, I know that when I was 15, my mum bought me Rich Dad, Poor Dad. What do you think about that one?
Yeah, great book. Yeah. And
what's it teaching you?
Well, I think it teaches you about having the right relationship with money. Right. So a lot of people, I suppose, they want to have property portfolios. They want to build their wealth. But if they have the wrong relationship with money, then that's going to be problematic in itself because you're not going to be able to build wealth. And, that relationship with money comes down to being able to manage your money well, and no matter what money you're earning. In fact, I think even as I think about it right now, Bob Proctor runs a series called Born Rich. Mm-hmm. And in his seminar series, he talks about your relationship with money, and he talks about if you are not good at that, find a coach that can help you in that area and learn how to be good at that. Because there's a definite formula for being wealthy. There's a definite formula for remaining even. Yeah. And there's a definite formula for going broke.
And it's not linked to your intelligence, is it? You can be highly qualified, highly intelligent, and horrible with money. And on the flip side, you could struggle to put the numbers on the page, but in many ways, just because of the systems you've put together, you actually find that money is not a problem for you.
Totally. And in fact, it's also not linked to your wages you earn. See, you could get just as rich working on chips at McDonald's as you could in an executive position. And the reason being is because it's not about how much money you earn, it's how you use your money.
Yeah.
How wisely you manage your money.
It's very easy to make some good decisions with massive multipliers that would easily make up for the extra few zeros that someone might make on a yearly basis that's also taxed, compared to someone who just goes and spends their money on the weekend, whether it's gambling or in punting on the share market, for example.
Totally, yeah. And I think...
Or a bad property investment.
Totally. Well, people, what they do, and in fact, Bob Proctor talks about this, and I think this is probably worth bringing in. It's a little bit philosophical, but I think it's still an important conversation to have. There's a book also that I think comes in with this, which is The Richest Man from Babylon. Now, in that book, the Babylonians were an ancient society that were very wealthy. And they talked about that the Babylonians had a philosophy where it was the first 10% of all you earned must be put away in savings for your future before you pay bills. Before you pay anything
it's like a future
entertainment-wise. Yeah, before you do anything else, any of your living costs, 10% must go into that future fund.
And that's like getting your boss to essentially put away $200 a week or whatever it is into a different account than your usual salary account. You don't even see it.
Totally, yeah. In fact, Bob Proctor used to do it this way. He used to draw out a week's calendar, right? And he'd say, so all that you earn between 9 a.m. and 1 p.m. on Monday goes into savings. Then the rest of it goes towards your general living costs. And I think if people could just adopt those types of policies first and foremost, that's probably the foundation principle in building a portfolio. Because I've seen a lot of people that have gone to the seminars, and you've probably seen them too, Trent, where they go to these seminars and they advertise fantastic outlandish claims like buy 7 properties safely in 7 years.
Yeah.
And things like that.
It ain't easy, especially in this market these days.
No, but if these people who go to these seminars, typically, by the way, these seminars will be free, and that should be your first warning, right? That this is probably not the right seminar. But, they go to these seminars thinking that's fantastic, and they don't have any idea on how to manage their money. And what happens is, yes, you know what? You could probably leverage off of some equity in a home and keep buying property to a certain degree, right? You can fake the valuations. You can do all sorts of things, which is what people do when they're in that situation. And before you know it, you can't afford to manage that portfolio, and that portfolio collapses around you.
Yeah, you've got this big debt that you can't even buy dinner with anymore.
Yeah, totally. And in fact, Italians have a wise saying, and again, I don't know if this is, correct, because I remember an old Italian guy saying it to me, but he said to me, look, Italians have a wise saying, and that is, you don't get rich in property when you sell it. So in other words, you get rich in property by buying it and holding it. Now, that then suggests that buying too much that you can't afford to hold can cause the whole thing to collapse again as well. So it's all about buying property that's within your means and making sure that you have a good financial management strategy around that so that you don't buy the next property too quickly.
We really need to be changing up our strategy. We're in a new time now where finance and debt leverage is not what it used to be 2 years ago. And what it means to me is that there's no longer that freedom to just go and be that person with 28 properties on the back of a newspaper and I earn $80,000 a year. The banks aren't letting you do that anymore. What you need to be doing is actually allocating as efficiently as possible the debt you can get.
That's
right. Be able to leverage that. And if it's not working for you, don't hold it. If you're losing hundreds of dollars a month passively just for the sake of having an investment property, is that a good strategy when you can't even live a normal life?
No, that's right. And, we manage quite a lot of properties in our company's portfolio, and we've got a lot of our landlords that are always on that edge. And, they can't afford to get the hot water system fixed when it blows up, and they can't afford to get the air conditioner fixed. That's no way to...
That's not a lifestyle.
Portfolio.
No.
Yeah. And what it means is that when things like that go wrong, and you can hear the edginess in their tone when you speak to them, if something like that goes wrong with their investment property, they're going off the deep end. That
you don't want to be in that situation.
Yeah, that in itself, it's not, and I don't begrudge the people for being in that state of mind. We're not the fault of it. Someone else is the fault of it. And it could have been the decisions they've made or the advice that they'd taken. Certainly from my point of view, it's about making sure you can bite off what you can chew.
Another book, Jan Summers.
Yeah, How to Build Wealth Through Investment Property. So Jan Summers was a school teacher, and she built a portfolio that she now lives off entirely. She also developed a couple of programs, PIA Pro, which is a software program that you can buy and you can manage your investment portfolio with it, put in all of the variables, and it will give you the cost per week to own that property after tax benefits and so on. Now, it's a good program to have, obviously, and incidentally, if you're out there considering investing, you spend $400 on that program, it'd be worth having.
Yeah.
But Jan Summers, she built her business really around portfolio that she built. And now, largely, I don't know if they even make a great deal of money out of that software program because they provide updates all the time. They never charge for them and so on. But she has an enormous portfolio. And all it was about for her was those fundamentals of managing your money. She did it all on a school teacher's salary.
That in itself is hope for a lot of people. A little bit harder now, I think, with the lending laws in terms of how quickly you can grow it. But
totally.
It just makes it that much more important to find the right properties that you're investing in from the get-go. Because one bad decision can put you back years, especially if you're spending those years grappling with yourself. Should I sell it? Should I deleverage this and buy something else? I'm not going to make any money off it. I might lose money.
Property selection is crucial. I totally agree with you. I think what we find is that people are so willing to listen to an exciting story about something that may not necessarily have great foundation. And a classic example would be, we're up in Karratha and Dampier and places like that, Port Hedland, where for a time there, that was a fantastic investment story. However, it didn't have a lot of foundation. So the prices, the rental returns and so on went through the roof. And you only need to then have something go wrong, like commodity values go down and the resource sector go into a bit of a decline, which is, what happened in the last few years. And those property values have plummeted along with the rental values. But these people that bought there are leveraged to the hilt.
Yeah, sold a dream.
Yeah, and now have lost all their equity in any of their portfolios elsewhere. So just making a selection on the back of something like that is crazy. It needs to be a good, safe area, like you said, around perhaps, gentrification. Yep. So, is the area improving because they're changing the demographic in there? That demographic largely would be changing based on zoning changes. Is there major infrastructure, but is it also metropolitan? And is it not too far out in metropolitan either, right? So, what's the road network?
Does it actually make sense for more density here? Or if this is an active investment strategy we're talking about, does it actually have real benefit to the community to be involved in investing in actively developing here? Or if we're just doing a passive investment, what reasons would people have in the future to want to spend more money on this property than I've spent on it? That's just a fundamental question of whatever you're investing in, property, shares.
Yep.
Why would this be worth more than I've paid for it sometime in the future?
Well, classic example of that is that for a long time there, the story around Ellenbrook, master plan community, it's going to be fantastic, et cetera, and the truth is there was in part some truth to that story.
Yeah.
And that story will start to emerge soon, I believe, with the Great Northern Highway going through. However, up until now, the road network there has been impossible. So what's happened is people have lived there and, getting in and out of that suburb in the morning, in peak hour, to go to work anywhere else is an absolute nightmare. So what happens then is that makes the livability and the desirability of living in that location not so great.
It could have been a good idea to buy that investment, that asset at that time, but circumstances have changed. Just like if you buy a share in a company that's invested in a project, you get maybe some government risk or political risk and whatnot. Circumstances have changed, and now those shares are worth less.
Totally.
Same thing with property. The idea of what the asset was going to be has not realized up until this point, and therefore that's why values in that specific example are not what they were sold to be.
No.
10 years ago.
That's right. Well, because they were, it was all on the back of the train line going out there, etc. Now, having said that, you've got a great road network going out there now. And so once that's up and running, I think you'll see a different story out that way. But again, we'd still need some policy changes here. Certainly that will become a good thing to keep an eye on. So that brings us back to part of the fundamental questions of this episode is that, what research what research do I do? Well, research what road projects are going in. Research what rail projects are going in.
What challenges might they have to actually get up? If it's just
Correct.
an idea right now,
exactly,
it doesn't mean that we're going to have a train station for another 10 years.
Totally. That's right. Yeah, because, is it at government level where it's a decision and it's actually
funded?
A policy and has it been funded?
Yeah.
Or is it a election promise, right? And see, as we know, I think the Ellenbrook train line, just to give you an idea, and again, I'm using this as an example, but the Ellenbrook train line was a political hot potato for years between each of the parties. And I'm still not sure it's funded yet. And that's the thing. So, you've got situations like that you need to really look deeply into.
Yep.
And you need to look at, okay, what employment is going to get created in the area? What's going to cause demand for housing? And so a classic example might be if we looked at Midland right now. You've got a university that's getting built there. Now, that university will then
require further of a specific type of housing solution.
Housing for students.
Yep.
Correct, right? So, it will eventually become quite a good investment out there. But what's happened is Midland's tanked in the meantime because everyone built these apartments.
Way oversupplied.
Yeah.
Everyone got excited way too early.
Way too early.
Yep.
Correct. So it's about timing. Yep. Timing is everything.
Well, that is a concept of any investment strategy. You could buy buy in or invest in a really good product, but at the end of the day, if you've done it at the way too early or way too late, you're either going to be waiting way too long to see that realize value, and if your concept doesn't align with that, then you'll lose because you'll get out before you're going to realize that value. Or if you're getting way too late because you weren't availed of that information you should have been availed of years before, or you didn't have the money at the time, and you've gotten in on a FOMO sort of arrangement, you'll be the first person to pay.
Yeah, that's right. Yeah. And I think, so let's go back to maybe one step further then on that research and, what underpins the growth in, the economic clock, so to speak. So when a region is ripe for it to be invested in, there's a few economic indicators that we can reasonably rely upon. And one of them is vacancy rates declining, right? So if vacancy rates are starting to decline, what that means is the equilibrium between supply and demand is starting to reverse in favour of property growth. In other words, our demand is starting to increase, or our supply is starting to get taken up by the existing latent level of demand.
Yeah, that supply that is always reactive to demand, it hasn't been pushing in the same way that maybe demand, which comes from population growth, has been sneaking up over time in the background.
Yeah, correct.
For me, that's the number one analog in this whole thing with property values. And as much as you can read all the books you want, the reality is, especially in Perth, especially given that supply is always reactive to demand, you can't build unless you have finance, and finance doesn't come unless you have the need. It's all about population growth. If the population is going up, especially from skilled migration, those people are coming in with money, with work, with skills, they need somewhere to live. That's either going to put pressure on the rental market or it's going to put pressure on the housing market. At the end of the day, that would be an imbalance again on the positive side of demand for the product versus supply. And then will be that lag, that lead time where the builders, the investors catch up over the next couple of years. And that's where you see those, in that cycle, that 2-year growth period that really pushes the prices of property to that next level.
If you look at the period we've just been through and largely maybe, I think, slowly transitioning out of now, we've been in an oversupply marketplace, right? And again, I think our oversupply comes from policy decisions, right? So I think it's very important that you look at what policy decisions are out there. Those policy decisions, by the way, are typically quite easy to identify. In other words, what policies are going to drive increased supply in an area? What policies are going to, restrict supply, and what is likely to create demand in that area. So like you said before, if you've got projects coming in, like right now, we've got some projects that are expanding back in the resource sector again. Commodity prices are higher again, both on gas, iron ore. So you start to then look at, and then you've got the lithium coming in.
Yep.
So you start to say...
a lot of public infrastructure with MetroNet. And
correct. So you say, okay, well, there's a fair bit going
shopping
on,
centres.
Right? And this is going to create jobs, right?
And jobs need to be filled by skilled people. And if we don't have them, then that has to come from somewhere else. And that is where that pressure on growth comes.
Yep.
And that is where then the couple of year lag of the investment side, the builder's side, figuring that out and getting their plans approved and starting to build creates that imbalance.
Totally. And if you look at, those rental values initially, because those people will migrate over on a rental basis.
Rent first.
Yep.
It's a leading indicator.
Correct. Yeah. And then that starts to push rents up. All of a sudden, people who are renting now, it's no longer... See, right now, we've had a prolonged period where it's been pretty comfortable to rent in WA. In fact, we've got people, some very wealthy people that are going, you know what, I'm not going to sink $4 million into a residential asset. No. I'm going to rent for $2,000 a week because it's actually cheaper
than the mortgage,
Yeah.
And there's less risk of investing in this asset.
Totally, yeah. And so, those people will start to go, oh, hang on a minute. Okay, so that's flipped now. All of a sudden, it's going to cost me $4,000 a week. Gee, you know what? I could probably be paying off a pretty decent mortgage with that.
Yeah.
And again, that's probably the one extreme, right? Obviously, we know that there's not a lot of people that are playing that game, right? There's a lot of other people that are renting around $400 a week. However, again, once that starts to flip and the $400 a week starts to become $500 and $520, all of a sudden they're going, hang on a minute.
Maybe I should be buying now.
Maybe I should be buying. Yeah. Let's, and then they only get, I think, moved out of a rental property a couple of times because the owners decide to sell it. And all of a sudden it's like, you know what? I want some security of tenure.
So rental, obviously, as an investment point there, a little bit off topic, but rental prices being a leading indicator for that next growth point.
These are the things that you need to pay attention to if you're looking at researching on property and looking at making a decision and investing in it.
So just to tie off on that dot point of doing your research, can we just quickly name some practical data points that where can we access those data points?
Yeah.
What websites are we looking at, or who are we asking?
Look, rewa.com is a great website. There's a lot of public information on there. But one thing I'd say is really crucial. Let's not get caught up in the median price as an indicator of anything. I'm not entirely sure why we still measure it.
Yeah.
To be brutal,
I agree.
right?
The median price reflects nothing.
Yeah, it doesn't. That's right. And, if you look at it as a bell curve, it's like the median price point is the 6 sales in the middle of that bell curve, right? And it's the average of those 6 sales. But if you've had a higher level of higher volume sales in that area, all of a sudden it looks like the median price has gone up.
We've all made $30,000. No, we haven't.
No.
In fact, some of the weaker suburbs right now are still losing money every day.
Yeah.
And some of the stronger suburbs are making a mint.
That's right.
Right now, today.
That's right. Exactly. So, median's kind of the one to stay away from. But, you can research through Rewa. You can research domain.com.
What about newspapers? Are we listening to the newspapers?
Yeah, look, some newspapers, like for instance, I don't know if I'd subscribe to the ones that are in a 24-hour news cycle.
Because they're just looking for...
They're looking for the next thing to sell the next lot of papers, right? So, their level of reporting prowess I think sometimes leaves a lot to be desired. The Fin Review, I would say, is a good paper. The West Australian, unfortunately, I think tends to be a little bit caught up in the 24-hour news cycle.
The thing that I struggle with on the West Australian, and it's topical, we are West Australians, we read the West Australian, we listen to WA, watch WA Today, Perth Now. The problem with that is the people
Current
that
affair.
I know, current affair, their job is to continually pump out product, pump out
Totally.
News. And
60 Minutes was a classic example a few months back, wasn't it?
you see all these highly skewed articles on news segments, and then surprisingly, the next day from the same organisation, there's been, from a different guy in the team, an article that totally contradicts that.
Yeah.
I collated in the space of a month, I think 10 articles from the West Australian. 5 of them said that WA was doomed. The other 5 said we were showing signs of growth or that we were going through the roof. Who do you listen to? All the same organisation. Jono, thanks a lot for your time.
You're welcome.
Have you soon. Okay, suburb spotlight time. We are talking Wilson today, small suburb, right in between a number of really interesting suburbs to me, being Waterford, Riverton, Shelley, Bentley, Cannington, Ferndale. All those areas, all those suburbs really do affect this small market of Wilson. And we're going to talk about why and how with Wilson's number one agent. That's Michael Minic. Michael, thanks for coming in.
Trent, thanks for having me. It's a pleasure. Thank you.
If you could give me, I'm going to throw this out to you right now. If you could give me one word to describe Wilson as a suburb, what would it be?
The Canning River.
Canning River. That's perfect, because I think that's the theme we want to focus on as well. Is not only is it close to some really obvious things, being the university, the Waterford shops, Cannington carousel shops, but we're a riverside suburb here, aren't we?
Mm-hmm. Yep, definitely. It's situated in the northern banks of the river there and the foreshore, and it's only approximately about 9 km to the Perth CBD.
Tell me about how Wilson started. Give me some background. We always like to talk about a bit of history, some fun facts. Can you give us a bit of information on that side?
Yeah, sure. So Wilson was developed in 1954. It was predominantly very state housing type homes.
Post-war?
Yeah, exactly right. So post-war, ex-war service homes back in the days. Obviously, it's gone through massive transition going on into 2019, and definitely a very popular suburb nowadays.
Is a few of those houses still around, going through that renewal phase?
Yeah, definitely. They usually asbestos-type fibro homes, which are still existent in certain streets of the area. But if you drive throughout the suburb, you're actually seeing a lot of transitioning that is happening.
I guess that gives a lot of opportunity for people who like the area and go, look, I don't want to pay for someone else's house. I like nearly land value on this property. There are still some of these properties here where, look, the house is pretty much worth nothing, and you're getting near land value to go in there, either develop or build your own beautiful family home.
Yeah, definitely agree with you, Trent. If you drive throughout the suburb, they have beautiful parks, nice reserves, nice cul-de-sacs as well. So that's creating a lot of attraction, not only to the local market, but also to the overseas activity as well.
The thing about Wilson is you've got a very major thoroughfare going through that suburb.
Sure. So that's a really important critique that you actually mentioned there. It's actually situated and separated into 2 sections. So obviously you got the Manning Road part of Wilson, which we call it the beer part.
Yep.
And obviously the Champagne part, which is just hugging the sparkling shores of the Canning River there.
So that owner-occupied, I would have thought, a bit more expensive, bit more solid market at the moment, being the houses in between the river and Leach Highway. And then you've got the more older development style development phase properties in between Leach Highway and Manning Road.
Yeah, definitely agree. So basically this section where the Canning River is, traditionally a lot of properties have sold up in that 3/4, even up to the $800,000, $900,000 price bracket there. And obviously when you get towards the Manning Road pocket, that's been heavily developed right this moment, you tend to attract a lot of the 3x2 type villas, 4x2s at times.
Are these people that are living there, a lot of students going to the university as well?
Yeah, definitely. So the Manning Road section, you tend to have a lot of investor type influence, which they tend to rent out to students, also young couples as well. So we're attracting a lot of professional young couples who are actually working in Curtin University, fly in, fly out, even being so close to the CBD, we're attracting that marketplace.
It's a good point, especially with the Gateway WA project. Suburbs like Wilson become more accessible to the airport just like that.
Yes, definitely. So Manning Road, it's everything. It's one of the major thoroughfares going through from Solder Point all the way down to Bentley, Cannington, part of Perth. So, but like I said, it's actually situated in very high turnover type corridors of the area.
People that are selling off you right now, are they people that have been living in the area for a long time, or is it a mix of those people and investors?
Yeah, good question there, Trent. It's actually a bit of a mixed bag, shall I say. So you tend to have a lot of, well, just recently I just sold a property for a gentleman who's been living there since 1960s. So
I like those stories.
Yeah, so we got obviously, it's not just a house, it's a home. So we will respect that. Obviously, we mention it to them, who do you think is going to buy their home? Yeah. They're aware that it's obviously going to be an investor or developer, even a young couple who's going to be willing to do the renovations, but with the potential to subdivide in the future.
It's important to note here in Wilson, we have really two markets, don't we? We have probably a market north of Leach Highway that is, if we're realistic about it, still going through the throes of that softer downturn with a bit more opportunity if you were looking at it right now to buy in at probably one of the cheapest times you can in Wilson for those development blocks.
Yes.
Or a cheap unit if you're a young couple looking at a home. And then you've got your more dress circle side south of Leach Highway, which really has those Riverton, Shelley influences for that owner-occupied lifestyle, which is a bit stronger market, and you're already seeing a little bit of growth coming back.
Yeah, definitely agree with you. So in that part of the Champagne part of Wilson, you tend to get a lot of the changeover marketplace in terms of like families who are wanting to upgrade. Exactly right. Yep. So just recently we had one where we sold to a property who basically they lived in St. James, also markets coming from Canning Vale, coming from Willerton, who are looking to enjoy that lifestyle, shall I say. Let's
talk about price points now. We've clearly got two markets to talk about, but we also have a number of products because there has been redevelopment and changeover of product type over time.
Sure.
What's the cheapest thing I could buy in Wilson right now?
So probably the cheapest product at the moment are available on Leach Highway, and believe it or not, Trent, everyone's probably thinking Leach Highway.
Yeah, there are houses, right?
Yeah, 66,000 cars that go down, storm down the front in that part of the town. But at the end of the day, there's a buy for every house out there, and you can potentially pick something up for 200 plus.
Wow, that's such a unique product, isn't it, to buy a house on a highway? As you said, there's always someone for every house.
Exactly.
If we come off of Leach Highway, what would that next price point be?
So the next price point would be perhaps like a duplex half, around about 350, 400 square metres. Again, 1960s, 3x1. Probably potentially anywhere between about mid to high 300s, depending on the finishings inside.
Okay, next point there. What are we looking at in the 400s?
Sure. So 400s would be predominantly 3x2s.
Units?
Yep.
Triplex sort of stuff?
Yeah, triplexes, units. You can potentially pick them up mid to high 400s.
Yep, okay. And then we start moving into some either development blocks or family homes, right?
Yeah, perfect. Exactly right, Trent. So once you break into the low 500s, again, depending on how big the lot, the zoning location as well, of course, you tend to be breaking into the fives.
Okay. Now, the most expensive property you've seen go in the last 12 months?
Yeah, actually, we sold it just in Wilson on Armstrong Road. We sold it for just under $1.3 million, and there was a six unit site, so it was a big sale.
Wow, it will definitely demonstrate that there are people out there willing to put their money where their mouth is in this suburb. And look, I'm a fan of Wilson. I've been looking for a long time at those areas. I'm waiting for a bit more strength in that unit market before, personally, on the buying side, I'm finding that. But I am seeing really a lot of fundamental reasons why you'd want to live or invest to develop in a place like Wilson because of all those fundamentals that we spoke of before. The amenities are ridiculous.
Yes.
I think the reason probably it isn't more expensive is because it's a small suburb and it doesn't have so many people advocating for it. Not many people know where Wilson is or what it does. So it's great to probably highlight it today.
Yeah, so a lot of people obviously been operating in the area for 13 and a half years. A lot of perception of buyers is that Wilson area that consists of a lot of state housing, but in matter of fact that whole area is changing quite rapidly, so it's attracting more younger professionals. It's attracting attention of definitely overseas developers and investors because of the proximity, but again, amenities, it's at your doorstep, Trent.
I think it's very similar to the idea of St. James, where even myself, I would recognise St James as historically a state housing place, state housing area. I don't think that anymore, and I don't think that at Wilson. I think there are some suburbs where definitely still that has a stain on there, but certainly not a place like Wilson. I think it really will be one of those gentrify, change up suburbs in the next cycle, where we're thinking of Wilson in similar terms to Riverton or it's not some, one of those more middle to upper class areas.
Exactly. So it's probably like Manning and Karawara like 10, 15 years ago.
Exactly right. Okay, next point that we want to talk about has to be development. You've referenced it a couple of times. Now, it's important to note that the whole suburb isn't developable. It's not a blanket zoning here where any house you buy in Wilson has development capacity. And there's pros and cons to that. Where are we focusing if we are a developer in terms of location for those opportunities?
Okay, so going back to the northern part of Wilson, the Manning Road section, you have a lot of R30s there, which traditionally you can build 2 units potentially.
So what's our normal land holding for a plot?
Yep, so on average in Wilson, the lot sizes, for example, if you go along Abbott Way, Andrews Road, a lot of the lots tend to be around about mid to high 700 square metres. There are land components that are up to 900 square metres. Plus even up to 1,000, where traditionally you can build up to 3 units potentially, but they're
pretty rare these days.
Very rare, but when they come up on the market, they sell in any marketplace.
Corner lots, you're seeing a little bit of interest in those?
Yeah, corner lots are always in high demand all throughout metropolitan Perth because you always get that value in terms of street frontage value, why shall I say? And like I said, when they do come up, they go really quick.
What sort of price would you be selling a normal R30 700 square metre-ish property for right now?
Again, depending on the streets, because certain streets attract different prices. As you get closer to, for example, Centenary Avenue, you do have views of the river.
Yep.
You also got the lifestyle. So in answering your question there, you'd probably be looking somewhere in that middle range, high fives perhaps.
Okay.
Once you go towards the back streets of Wilson.
So the eastern side?
Exactly right. So potentially no higher than 500,000.
Okay, well, I guess there's opportunities there for a lot of people to afford that. And even if it wasn't today, be able to land bank and have that optionality to go forward. I think Wilson's probably an area where R30 decisions might be made at some point as well to probably increase that to an R40, especially given the land holdings of 700. It just allows for another level of housing option.
Yes, there's talks about it, but as Perth gets bigger and bigger, density the zoning has to increase over time, and in particular heavily in Wilson over time. But how long's a piece of string?
You haven't mentioned any R40 sites, therefore I'm assuming that there aren't any flats or apartments in Wilson?
Not at the moment, but I know once you cross the Manning Road, stock there available, in particular Bentley, Cannington, in those areas.
Some suburbs, I guess you have those very protective owners who are quite unionised in a way and say, not in our backyard. We want this to stay as a more of an owner-occupied maximum R30 area. Do you get a feeling that it's a suburb that's more progressive, looking for different options and looking for development options, or they would prefer to keep it as minimal residents as possible? Yeah,
I definitely heard of that, and obviously everyone's have their own opinions in these type of scenarios, and they had the same issue like that a couple of years ago with the Canning Bridge precinct. But at the end of the day, Perth is one of the fastest growing cities in this country. Traffic is a problem, and they have no choice to increase zoning over time. Yeah,
well, I think it'll probably be a case where they will keep protecting the Champagne area, and they will keep developing the beer area, if we can call it that, and because it is so accessible to all these great areas.
They are, and as you mentioned a couple of minutes ago, just the amenities at the doorstep it's second to none.
Michael, last question. And this is probably a hard one because there's 2 parts of Wilson that we've identified. But what's the median house price in Wilson?
So the median house price at the moment is approximately about $500,000.
All right. If you had $500,000 in your pocket, what would you buy?
So definitely I would be land banking for sure, a development site trend because of the potential in the future.
Okay, awesome. Michael, thank you very much for coming in and chatting Wilson. We'll have you in again soon for another chat on this fantastic south of the river suburb.
Thanks for having me, Trent. Really appreciate it. Thank you.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!